All right, thanks, Soon-Chai. As Soon-Chai mentioned, my name is John Page. I am the president of the services group here at Keysight Technologies. And I joined the company almost 30 years ago. And in that time, I've had the opportunity to work in a number of different areas. I ran a large services center, not a surprise there. I led a product line where I had hardware R&D, software R&D, manufacturing, and marketing responsibilities. And I held a number of positions, senior positions in our finance organization. But during that time, I also had the opportunity to help lead some really transformative events that happened. And I'll tell you about just a couple of them here this morning. The first one, we had a senior technologist, and he had uncovered a capability in one of our central labs. And he had this idea to turn that into a whole new product category. So what we did is we took 3 folks, himself, myself, and one other person, and we formed a startup inside of the company with the goal of turning that into a business. Over the next 2 years, we went from the 3 of us and no revenue to 1,800 people and $1 billion worth of revenue. And the lead product for that group was the optical computer mouse that most of you are using here today. I'll give you another example of a great transformation effort I got to be a part of. There was a company, a different company, but they had some really great foundational technology. They had over 800 patents on this technology, but they didn't have it as a business. And what they asked me to do was join them and help them turn this into a business. And that's what we did. And now that company is providing the color rendering technology in many of the LCDs that you see today. So if any of you have seen the Samsung QLED TVs, that Q stands for quantum dots. And that quantum dots is what that company, the technology that they brought to the market, and it's what enables those Samsung TVs to have such amazing color. So why did I bring up these 2 stories? Well, first off, they're kind of fun. Second, they really illustrate what we've done in the past multiple times, where we take something that has an incredible core and we leverage that. We execute on it, we grow it, and we turn it into something more than it started off with. And really, when Ron asked me to run the services group, this is exactly the way I thought about this, because Keysight has an incredible services group. It's historically been very internally focused, but it's this great core of capabilities that we hadn't been leveraging, and there's an opportunity to really grow that and leverage it further. So that theme is going to run through my entire presentation. So with that, we'll jump in. So here are some of the key takeaway points I want you to remember. First off, there is a huge opportunity to grow our services business. Now, 3 years ago, at our last Investor Day, my predecessor stood up here and pointed this out to you all. And he talked about taking services from $400 million to $600 million by 2020. And we absolutely believe in the size of the opportunity, or committed to the $600 million. But that strategy relied on, as Ron had mentioned, a series of acquisitions to expand our capabilities and our geographic reach. And quite frankly, when the rubber hit the road and we looked for targets, it was a lot harder to find good quality targets that met our return criteria and be able to do that. So we have to shift our strategy. We're going to have to do more of this organically than we had planned originally. And that's just plain going to take a little bit longer than the original plan. Second, you've heard Ron and everybody else talk about how we're shifting from hardware products to software solutions. Well, when you do solutions, services is a key part of that solution and gives us an opportunity to grow in this group as well. Third, we're getting traction. This is really happening. We've introduced a number of new services and we've expanded existing services, and our customers are telling us with their wallets that these things are on target and providing incremental value to them. Fourth, we're in a unique competitive position. There's no other company in our industry who has the breadth of technical expertise, the global footprints and services, and the trusted relationship and quality reputation that Keysight has to be able to build an extended services business. So when you put all that together, you get number 5. We're very well positioned to now grow this organically, but we'll continue to look for opportunities to grow this through M&A using a very disciplined approach. So let's put some sides in the box, let you know what our services business looks like today. Our services business has been flat at about $400 million for quite a while, But last year in FY17, we started to push the needle. We grew our revenue by 4%, we grew our orders by 6%, we grew our operating profit by 8%, and this most recent quarter we grew by 7%. So it's starting to take hold. Traditionally, our historic business has been in 3 categories. Calibration is the first one. Keysight produces very precision instrumentation. And in order for that instrumentation to continue to work within spec, it needs to be calibrated on a regular business. And we've had a long-term steady business calibrating our own equipment. Repair is another big business for us, relatively stable, similar to the calibration business. We do a lot of work repairing our own equipment. And then refurbished equipment. We have quite a successful business taking in used equipment, refurbishing it, and reselling it. Now, in order to provide those services, we've built an infrastructure of over 50 service centers in 30 countries around the world. We've staffed it with technical experts, and those capabilities have been accredited by all the leading standards boards. Another important thing to just remember about services is the majority of our revenue is recurring revenue, which is very nice. It gives us a great platform to build upon and add new services and new sources of revenue. And it makes us less volatile both on the downside and on the upside. So let's talk about some of the things that we've done recently to change the trajectory of services and grow it. So I took this job about 2 years ago, and when I came in, the first thing I noticed was that we had a really strong team and a strong services organization. But it was very much focused internally, focused on hardware equipment and specifically Keysight hardware equipment. So what are we doing first? First, we looked at expanding that. So just by looking at the rest of the market, you saw from Ron's slides that Keysight's got about 22% market share. By opening up our services to the rest of the market, we make that entire rest of the market available for us to offer services. So we're increasing our multi-brand services capabilities. We're expanding our used equipment business by adding new sources of used equipment and by adding new e-channels to provide low-cost ways to reach new customers that we didn't reach before. Acquisitions have been tougher than we had originally expected, but we have bought 3 companies, and they have added critical capabilities to our services to be able to extend organically. So that's led to a number of outcomes that we'll share with you. So we've had multi-million-dollar managed services deals in the last 2 years in every region in the world. So we're getting the traction. Where we're investing, we're growing. We invested in our used equipment business, and we invested in our calibration and managed services business, and those grew 8% last year. We launched Keysight Financial Services, giving people a new way to buy. We'll talk more about that in a minute. And last week at Mobile World Congress, we launched our test asset optimization software and services. And that gives us an ability that we have never had before to manage our customers' equipment end to end. So let's quickly talk about the competitive landscape. In services, it's very fragmented. Most of the other OEMs only service their own equipment. Consequently, there are a number of small service providers around the world, geographically dispersed, doing different things. And so a lot of our customers still do things in-house. There's a bunch of training firms and rental lease companies and so forth. But that's not what the customer wants. What the customer wants is one source, one trusted provider, a one-stop shop to help with all of their test and measurement equipment. They want to reduce their cost of test, not just the cost of their equipment, they want to reduce their total cost of test. Most of our customers have a substantial investment in all of the test equipment they have, and they're trying to get better asset utilization out of that. We can help them with that. And they're looking for purchasing alternatives to better match their equipment usage profile with how they purchase and own their equipment. So why does Keysight win? Simply because we're the only ones who can really pull this whole thing together. We've got our largest installed base, we've got the largest global footprint in services, we've got growing multi-brand technical expertise, and we are the trusted advisor with a quality reputation. So it puts us in a great place to execute here. So what I want to do is walk you through quickly how we're taking our base capabilities today and extending them and expanding them for growth opportunities going forward. And it helps to look at this from a customer perspective. So through the customer life cycle, our customers acquire equipment, they put it into use, they maintain it, and they're always looking to optimize it. So we're going to walk through each one of these areas and talk about what we have historically and how we're leveraging that differently going forward. So, acquire. We actually do a number of things to help our customers acquire equipment. The one I want to really focus on today is our used equipment business. So we've had a long-term business doing used equipment. It started off taking our demo inventory that our field had used with our customers and turning that back into cash. But in doing that, we created this marketing machine, this remarketing machine that can turn used equipment, refurbish it, certify it, and sell it as like new at a lower cost. But this machine was really limited by the amount of inventory we had to sell. So how do we grow this business? Well, one of the things we do is we expand the supply of incoming used equipment for them to do. So we're doing a number of things. For example, we launched new and expanded trade-in programs so our customers can bring us their old equipment, get credit for the new equipment, and give us more supply. And we launched Keysight Financial Services late last year. So for the first time, we're offering operating leases. It's also a nice new way for customers to buy new equipment, but on the return side, we get all that used equipment back and get to sell it a second time. And I mentioned task automation services. When we go in there and help manage a customer's entire equipment cycle, it gives us access to the disposition of that equipment as well. We get to bring that in-house. And with all of that, we've reached a lot of new customers by launching new e-commerce programs, which is growing double digits every quarter for us at this point. So helping our customers better use our equipment. We do a number of things. Jay had mentioned startup assistance and technology upgrade cycles. But one of the things I want to focus on today is a fundamental shift. So historically, we've done everything we can to really support our customers and take care of them. And we do that through free technical support. So if you go out and buy a 20-year-old piece of equipment with an HP logo on it, or you buy a relatively new high-end piece of equipment, either one of you can call us and get free technical support. Well, later on this year, that fundamentally changes. What we're going to do is offer 3 tiers of premium support that offers a new level of support for the customer, additional value and higher expectations, and we're going to charge for that, and we're going to open a new revenue stream for ourselves that we haven't had before. We're very excited about this happening. All right, let's go to maintenance. So maintenance is something that's been a core part of our business for a long time. I've already talked about it, something that we do on our own equipment. We're now taking that and leveraging it to multi-brands, opening up a much bigger market for ourselves to do this, and becoming that trusted one-stop shop for our customers to do all of their equipment. And it turns out, once you start maintaining not just your equipment, but others' equipment, they ask you to do more. So now we're managing all of this equipment through the life cycle, and increasingly they're asking us to take the next step and actually take over their labs and manage their labs and do their tests for them. We have done a number of acquisitions in this area that have added to our capabilities, and we're going to continue to look for acquisitions if we can find ones that make sense financially. And we've had large managed services deals around the world proving this. All right, so let's talk about optimizing not just the equipment, but the overall test process for folks. And there's a number of ways we help people optimize their test processes and equipment. I'll highlight 2 today. So one is the test asset optimization software and services that I mentioned before. It's an entirely new thing. We introduced it at Mobile World Congress last week. And what it does is it connects all of our customers' test equipment, not just Keysight test equipment, but all of their brands of test equipment. Essentially treats them like an IoT device, pulls information off of them and sends them to a cloud-based application that gives us new insights and new understanding of how that equipment is being used. With that, we have the power to do lots of new things. So, for example, if you know where their equipment is and how much they're using it, it allows you to move it around from where it's needed to from where it's being used to where it's needed, and increase the utilization that our customers are able to get from their equipment. It allows predictive maintenance. If this equipment is being used very heavily, it allows us to calibrate them more frequently to make sure that they're within spec. Conversely, if they're not using them very often, they can extend their calibration cycle and save some money. Also, we know the failure profile of our equipment, and by monitoring this, we can actually predict when equipment will fail before it fails and therefore offer services to guarantee uptime assurance. Again, as you're managing all of this, we help them dispose of equipment that they're no longer using and upgrade to new equipment. The other area in this, another activity in this area that I'll mention is test as a service. So our historic model is to take our customers, go out, they evaluate equipment, they buy equipment, they install the equipment, they learn how to use the equipment, they run the tests, and they dispose of the equipment. Test as a service model is a 180 turn from that, where our customers bring what they need tested to us. We use our equipment, our people, our technical expertise, and our automated test scripts to be able to do the test for them. Now, obviously, this doesn't apply in every case, but where it applies, it saves a lot of time and money for our customers. And this is really early days in this business. We've just launched one lab in Berblingen, Germany, right next to Stuttgart, the heart of the automotive industry there, focused on automotive with electromagnetic compatibility, with all the stuff that Sunchai talked about electrification of the cars. The demand for this is growing dramatically. And a second lab hasn't even opened yet. We're actually opening it later this month in the heart of Silicon Valley in our Santa Clara offices. And it's focused on digital performance and IoT testing. Even though the lab isn't open yet, there's a lot of excitement about it. We're actually building a funnel of some pretty interested companies, and we've already landed our first orders from a name brand large Silicon Valley firm I can't talk about. All right. So sometimes illustration will help. So here's a case study. A large aerospace defense company came to us a little over a year ago, and they asked us basically to do some calibration services. But in discussions with them, and talking to them about what they were really trying to accomplish from a business perspective, it turned out that they really wanted a lot more. They wanted end-to-end management of all their equipment, regardless of the brand. So that's what we did. So today we're buying their equipment, we're installing their equipment, they're managing their equipment, we're actually moving it around from place to place to optimize utilization, and we're disposing of their equipment. And shortly, we'll be installing our test asset optimization software so that we can even do that better. So what we did is we took something that could have been a very small calibration job, and we turned it into a multi-million-dollar, multi-year services contract. And the customer couldn't be happier. In fact, they're asking us now to do more. They're asking us to take over entire labs for them, to run them, and to do their tests for them. And we see this as a lot of the future. So, in summary, customers are seeking this much broader level of service across all of their test assets, and Keysight's uniquely positioned to be able to do that. We have validation with our early customers. They are voting with their wallets and telling us that these services are of value, and they're very interested in them. Services, as always, provides stable, profitable, recurring revenue growth. Nice attributes. And as I said up front, we remain very committed and convinced of our ability to get to that $600 million number. So with that, I'll stop, and I will turn it over to Mark Wallace, our SVP of Global Sales. Thank you.